Okay. We are now recording the November 30th, 2018 Small Business Accounting Advisors. Hello, everyone.
Happy Friday.
Happy Friday. Today's going to be a little special. It's going to be Sarah Laidlaw Woodruff. She's going to be talking about nonprofits, the unique issues, and how to deal with them. Sarah, the floor is yours.
Exciting stuff. Hi. So I think it was Lisa asked that I would show a couple things in QuickBooks and some of the unique things about nonprofit accounting. I've been a nonprofit accountant for 30 years, and I do a lot of audit prep. So nonprofit accounting can be scary and a little complex, but it's still learnable and doable. And most of my clients are in desktop, but I'm moving a couple to QBO. I'm going to start heading y'all's way. So I'm going to start with a little theory. I'm trying not to bore you guys, but there's no point looking at software if you don't know the unique things that you need to do, or why do we do some of these things? So, all right, so here I typed up some things. Can you see my screen?
Yes.
Okay. So I'm not going to, and I can give this to, this handout to anybody who wants it afterwards. I'll put it on Dropbox or something, but nonprofits are unique, and I have like a love-hate relationship with nonprofits and accounting, okay? Because they do things so oddly, okay? One of the important things to know is the accounting can be looked at with different eyes. So the two top things, the two different eyes that we look at are GAAP or audit basis or tax basis. Okay. So if you say you're a nonprofit accountant and you need to set up books for a nonprofit, you need to know what is the most important set of eyes that are going to be on your books, because you can set things up with tax eyes or GAAP eyes, and then when you have it set up, there are differences between the two, and you have to know the little subtle, oh, it's going to go this way on the tax return, oh, this is going to go this way on the audit. So one of the things that trips us up is we look to professionals, and they'll say, or I'll be training a nonprofit, and they'll say, oh no, my accountant told me to do it this way. Well, is your accountant an auditor, or is your accountant a tax person? Because they may tell you two completely different ways to do something. So part of being a really good nonprofit bookkeeper is to try to learn as much as you can about the nuances of all the different ways that that we can handle nonprofit accounting. So, and of course, our tax accountants and our auditors need to be aware of this too. But it's all part of the willingness to learn. Instead of, I'm not an accountant, I do the best I can, I'm just going to let the auditors fix it at year end. I'd rather you look at it as an opportunity to learn different ways to do things and really learn the industry so that you can be the best bookkeeper that you can be. All right, so, whoops, I went too fast. Okay, so I came up with some items that are unique to nonprofits, and it was like 2.5 pages. I thought, oh, that'll scare them. Okay, so the biggest thing is the GAAP versus tax differences. But what's different between nonprofits and regular clients is the audience of your financial reports. Like with a regular company, you've got the owner, and you might have their tax person, and that's all you're dealing with, really. But for a nonprofit, you could have all these different people that want to look at figures, and they all want to look at the figures a different way. Another thing that trips us up is, and this is cosmetic, of course, is the terminology. We can't say income. We can't say retained earnings. We can't say balance sheet or income statement and P&L. We can't say net profit and loss at the bottom of the financial statement. In QuickBooks, a lot of these cannot be changed unless you export them out to Excel and change them once they get into Excel. But if you really know what you're doing and you want to be impressive with your reports, you know your terminology and you change them. Okay. The next page there. Every nonprofit will have a defined mission. You should know what that mission is because that determines the way a lot of things are handled. Most nonprofits must be on the accrual basis. So you're working with accounts receivable and accounts payable. So full-blown, full-charge bookkeeping in most cases. Then we get into tracking the use of and the balances of donor restricted contributions, what the donor asked you to spend the money on. Board designated funds are unrestricted, but a board can say, well, I'm going to set aside this much money for this purpose. And that can be tracked. And of course, permanently restricted funds. Then the next thing you have to learn is how to report those restricted funds. And in the equity section, in the net asset section. Unrelated business income tax, that's fun. I have museums that if you rent out space, that's usually not a problem. But once you start adding services and a bar and labor, it becomes like a profit center that you're going to have to pay taxes on. We have to learn about special kinds of fundraising issues. There's special events, and this is a very specific definition in the tax code and for the audit. And it involves the direct cost of production versus promotion of that event. We have auctions. We have to know about fair market value and how to book an auction and how, what part is tax deductible to the person who purchased something, if any. Raffles and gambling can be an issue. We have to have special permits. It goes in a special place in the tax return. You get into non-cash in-kind donations. It can get so many different ways to do it. Donated property treatment. People are surprised that if they have a little raffle and they give somebody, and somebody wins, that they have to get a 1099. It's has a fair market value over 600. Dues revenue, that trips up a lot of bookkeepers. Is it disguised contributions or is it truly a non-deductible dues? Like I have membership nonprofits who they have to be accepted if there's a lot of dues. They have to be part of the, very specific rules to become a part of the membership. It isn't open to just anybody, and there are significant benefits and duties that they have to do. Whereas a musician, my brain just fried. A museum that has a membership drive and families are $30 and singles are, $25, something like that. That kind of membership is really a fundraising type idea. Okay, and it's reported as contributions versus dues revenue. What else do I have in here? People are shocked to find out that promises to give are recognized as revenue when promised, not when paid. So Pledge AR is booked at 100% regardless of when the donor is going to pay it. So they say, I'm going to pay you $50,000 and $10,000 a year for 5 years. I have to book $50,000. Those are those little nuances that you just don't see in regular companies. Grants are recognized at 100% of revenue when awarded. So when you get that award letter, went around and around with one nonprofit. They got their award letter on December 5th, and it's supposed to be spent in the next year. And for audit purposes, I had to book it when we got the letter, not when they received the money the next year or when we're going to use the money. I think it's a myth that nonprofits are all broke, that everything has to be donated, services, goods. A nonprofit has a public mission. It does not pay taxes on its surplus, which is what they call profit, and they can offer tax deductions for contributions, but a nonprofit has to have surplus or it won't survive. And then Megan and I could go around, crazy about the myth of, what the high percentage of money needs to be spent on programs versus overhead and actually, supporting the nonprofit. You can't survive without computers and good labor and everything that takes to run a business, which basically a nonprofit is. So now things that are not unique to nonprofits: payroll, rarely any difference in payroll, overtime, Department of Labor rules, employees versus contractors, 1099 rules, sales tax can be up to the state. In our state, they don't get a break unless it's educational. Other states, they don't pay sales tax on when they buy office supplies or whatever, or they don't have to charge sales tax when they, sell that ham. We do. And what's not unique to nonprofits is insufficient budgeted funds to receive proper accounting. I think everybody has that problem. So let's see. Okay. So when I sit down with a nonprofit or I'm training on someone how to work with nonprofits, you have to understand that you have to step back and look at the whole picture with 5 sets of eyes. And you have to know all the different ways the different people in the audience or the financial statement audience will want to see these reports. And can you do that in a $185 program? Most of it. Do you have to go to nonprofit accounting? Maybe not. Churches and schools, educational nonprofits are still required to do fund accounting, but for everybody else, fund accounting went out in 1997. So, you have to learn the different ways you have to track information, but you may be able to take a program like QuickBooks and do perfectly fine in it with a couple little tweaks. So when I'm setting up I found this. Imagine satisfying the reporting needs of the IRS and the auditors and the program managers and your board and the grantors and yourself, and do that in $185 program. So it's doable, but you have to step back and figure out which way you're going to go, because you can't do it all. So I personally look at a set of books in this specific order. And I'm speaking mainly of organizing a chart of accounts, okay? Just about everybody's going to have a 990. So I get familiar with the 990 and how the tax return wants things grouped and organized. And that's probably first in my mind, of organizing that chart of accounts to match the tax return. Now, keep in mind that your trial balance can be mapped by the auditor and by the tax person, and those accounts can go anywhere they want them to go. Even though you've put something down here, they can put it up here. So we aren't, my goal is to be organized in a way that makes their job easier, though I don't have to be perfect at it, okay? And I'll get into a couple of things that trip us up. If they're large enough to be audited or they pay for an audit, my books are usually audit or GAAP basis, and I try to keep separate little accounts in areas that I know the tax accountant is going to need that I don't need for the audit. But by having a separate GL account, the tax accountant can do what they need to do. The third is management wishes. And this is where I'll walk into a nonprofit and I'll find a chart of accounts that's 40 pages long because there's turnover of treasurers, and this one wants to see reports this way, and this one wants to see reports that way. And then after years of turnover, you find a mess. Okay. So the name of the game is try to satisfy the tax and the auditors. See if that's enough for management. See what kind of special things they want. You may be able to do it with subsidiary reports with item codes or, other codes in other subsidiary reports, or you may not need to break something out for the audit, but it really helps for budgeting. Okay. So the next level is find out what management wants. And then the trick is we're done. You've got a chart of accounts, you try to put it in the financial procedures, and you don't want that chart of accounts to change every year. It needs to be a conscious decision to add a new account. It needs to stay consistent through all the years. And so as usually the accountant, that's part of my shtick, is I stay constant. Staff comes and goes and the board comes and goes, but I stay constant. And part of the struggle is somebody new will come on board and they want all this new things, and you have to go, we've already been there, done that. And unless it's something very significant, they may not, get the change. So part of it is being strong enough in your knowledge of what you do to be able to have a conversation with the client and not let them make a lot of changes. The fourth level is the funding source requirements. I see so many books set up. Well, this grant tells me I have to whatever. I have to break out this way, okay? No. The funding source is lower on the list. If I can produce reports for them, maybe I need it, just maybe a couple little tweaks is all I need. But sometimes you'll get these grant budgets, and they are grouped in all kinds of netted type areas of expenses, and it just doesn't, you can't fit it with your chart of accounts. Well, we're probably going to have to do some Excel work or another way to track, maybe use another code of some sort to track for that grant. That's where item codes come in pretty good, so that it makes our grant reporting easier. But I never design a chart of accounts to satisfy a grantor, because there's a lot of them, they come and go, and that isn't my focus on my main set of books. And the fifth thing that tricks people up, because everybody goes to Dr. Google to learn how to do things, is individual donor rules. So someone will say, oh no, I read on the internet, this is how you do it. Okay. And I go, I think what you're reading is what the donor has to do on their side. And one example of this would be a fair market value of, say, a donated desk. Okay. And if I'm going to book the desk, I'm going to find out what it's worth if I were to buy that used desk or whatever today. Has absolutely nothing to do with what the donor can write off on their personal taxes. So we give them a tax receipt that says, thanks for the desk. You can say something like, we planned on spending, $400 on a desk, and your generous gift has enabled us to use this money in another area. But you never place a value on it. That's up to the donor to place a value on that donated property. So I see bookkeepers who get confused over what donor rules are versus what's in the book. All right, enough of that. Basically, this is just a list of, if I'm doing implementation, who should be involved, what kind of questions to ask. You're just not going to see this in regular companies. Like, really the sources of revenue is the biggest thing with nonprofits. Is there's so many different kinds of revenue streams. Whereas with a regular, my carpet company, I sell carpet. So the other is I came up with a little chart of where some things are presented one way for tax and other ways for GAAP. For instance, donated services. There's very specific kinds of donated services that can go on your audited financials. They're never on your tax return, but you can always brag about them. So this is a handy little chart. Like volunteer. Oh, I duplicated it. Never on the tax return, never in your GAP's financials, but definitely put it in your annual report and your grant applications and on your website. All right. So now let's talk about QuickBooks. All right. One of the, when you look at the set of books, you have to think about how we're going to chop up all this information, because all your accounting software is a big database, and we need to be able to chop it up the way we need it. The first thing is, what are we spending it on? The what? And that's your chart of accounts. And they're natural, they're generic. Printing is printing, rent is rent, okay? It has nothing to do with who's paying for it, why we're buying it. It is what we're buying, okay? So the next one, the next division is, why was it spent? And this is where we get into what's called function codes. If you look on a 990, we break up by all the expenses by program, management, and fundraising. Those are the three main totals. And that's a whole nother art in and of itself. So we choose to use the class names because they run with the fiscal year. And the class names will break out those required divisions that we need for the 990 and the audit. Okay. And then underneath that, you can do subclasses. Like I may have program, and then I may go program 1, program 2. I may do special activities of a program. Like, we start coding and they start throwing all these programs at us, and then we go, stop, wait. Let's go back to the beginning. What's your mission? Let me see your website. What are you advertising? What real programs do you have? High level programs do you have? Education, like that. Now there may be projects underneath that program that we may want to track for management purposes. I don't need it for the tax return. I don't need it for the 990, but they need it. So we can be as detailed as we need to be in the class name, as long as I have my program management and fundraising. Then the next level is, who's paying for it? That's your funding source. Is it just unrestricted funds that we're spending, or are we satisfying a donor's restricted contribution? Are we satisfying a grant or a foundation restriction? And in this case, we use the customer job list to set up those codes. The problem is, can I see down there? There are not enough fields. There just aren't enough fields in QuickBooks. So be careful. If I don't have a separate donor database to track my donations and my donors and all that information, and I'm using QuickBooks to track my donors, and then somebody starts a campaign to build a building, I can't use that class list for both. I can't track each individual donation and track a fund. The restricted purpose is build the building. We have a capital campaign. Now I lose the ability to track both. Okay, so be aware of that. And then, on the customer list. And then the class name, if I'm using it for function, now I don't have a location. In QBO, I got some more ways to chop up information. But in desktop, I don't have a code for location. I don't have a code for departments. There may be a advertising or development department and a program department. So you in your planning, you have to step back, really find out what the nonprofit is about before you make some decisions. Okay. And then this gets really boring, but function cost allocations, the program admin, and it requires training and experience. And there's some areas can trip you up. There's basically program services, which are the activities and costs that relate to the mission, and it results in the actual delivery of your goods and services to your beneficiaries. Okay, that's a big mouthful, but that's program. But we also have supporting services. We have to break it out by fundraising and management and admin, and then there's another section, this part of management and admin, it's called membership development. So some stuff's really easy. I'm buying a supply for this program and I can code it to that program, easy peasy, okay? It gets a little tricky in some areas. So be shocked. Okay, you'll be shocked at how many things are supposed to be management and support. All the back off. I can't tell you how many 990s. I go to the statement of functional expenses and I go to the accounting line and they've got that puppy split out between program fundraising and, okay, accounting is 100% admin, always will be, okay. That's usually the first clue that whoever put the 990 together they're not up on 990s, but human resources, accounting, dues and subscriptions. I get a lot of blowback on that one. Staff development and training. Just because you're learning how to do a program does not mean it's a program cost. Okay. Advertising trips people up. If it's general in nature, if it's brand recognition, if it's, come to our museum, but it has to be a call to action. Like, yeah, come to the museum on Wednesday. We're having this event. See the difference? Training materials, your annual report, all that printing and postage, board and committee meetings. Committee meetings can be tricky because they'll say, well, we're talking about how we're going to do this, program. Award meetings and dinners. People will think they're fundraisers. Well, they're not a fundraiser unless you've got you've advertised it as a fundraiser and you've got a ticket price because if you have a meeting or a dinner or annual awards dinner and you just happen to gain contributions during that event, it's still just contributions. It's not part of the fundraiser. And then of course, membership development, that's not fun. So, and then the last page is, you'll get expenses like salaries and wages or rent or the utilities or the copier and office supplies and all those things. You can't allocate it usually at the point that you buy it unless you've already come up. I'll do that in a minute. But I usually put into an unallocated code and then come back later and allocate it. Now you can allocate expenses at the point of the bill or the check, the point of the expense, or in total monthly or quarterly, or depending on the size of your nonprofit. I do them all annually because the function report is required for the audit and the 990. Rarely does the nonprofit want to see that during the year. So it just depends on the level of nonprofit and how complex they want it, because coding that way on every transaction and during the year takes someone who's detail oriented, who checks behind their work. I mean, there's no checks and balances, so it's very tricky to do that. And then once it's ready to be allocated, different types of expenses can be allocated by percentage of wages or percentage of square footage. So that's one of the year-end things that we do. And I can't tell you how many 990s I open up and it's 80-10. They just make it up. You can tell which ones are made up, but that doesn't give the doesn't help in the long run. Okay, so that's enough. Now, I took the sample We Care Community Foundation QuickBooks file and came in last night. Now, of course, the first thing I do, because I'm old school, is I take the icons, I put it across the top, I turn my colors back on. Okay, I went through the preferences and tweaked it how I wanted it. Can you see it? You can see the QuickBooks? Okay. And all right, so I turned on my chart of accounts. Now, here's the thing. When somebody buys a software program and they either buy the nonprofit version or when they set it up, they say, I'm a nonprofit. This is what they get. So then they think, oh, well, this is the way I have to do it. But that's not necessarily true. If I want my chart of accounts, I may have two audiences for my chart. I may have program developers who care about account numbers and budget and all that, but I may have short, I call them pretty, board reports where I don't want the account number. So I'll use the description field for the pretty name. For instance, prepaid expenses may be, PREP, but then prepaid expenses may be spelled out on the description. So there's no right or wrong way, but just things to think about. The reason I like the account names as short as possible is because these fields are horribly small. Accounts payable, here's a check. Especially when it comes to the balance sheet accounts. Now, you can maneuver the field for expenses, but anyway, I like sometimes if you go, we can go 5 levels deep in QuickBooks, and so you have a header and then a sub account and then a sub of the sub, and then and that puppy gets really long, so I like to abbreviate. All right, so I went to preferences and I made sure a couple things were turned on. You want to make sure that your classes are turned on. It doesn't come right out of the box turned on. And if this is enterprise, I have a couple of different features at the enterprise level, like you can assign a class to a name, an item, or an account. So that's a little unique. That can be handy. Most nonprofits are in Pro and Premier, so you're not going to have some of these toys. So I turned on my classes, and let's see, list classes at 6 o'clock. Okay, I hid all the ones that came with the software. You guys got to see this. That's crazy. So I sort of think what they're doing here, but it's a little too complex for my eyes. I want, P for program and some sub accounts. Some people only have one program. Matter of fact, most of my clients only have one program. So it's program. Management support, I usually have one. I have one client who, because we can't do departments, there are some management and support costs that they apply to a program in their head, okay? And they want to see what that program's really doing. I have to go to management and support for my purposes, but we can break it out by program or general for management purposes, because I'm just going to use the grand total. And that way they can pull a report on program 1 and they're going to see not just their program costs, but what they consider their overhead costs. So sometimes I'll set that up. Fundraising, I usually have a general and a special event. The special event is, I could talk all night on all these little nuances, but if you have a ticket price that's significantly more than the retail, the fair market value of a dinner and a band, then the difference between what it would be worth if you paid retail for it and the ticket price, the difference is a contribution. And the reason we only track direct costs is because the IRS wants to know, okay, if the fair market value of the dinner is $25 and my direct cost for the band and the food is $25, if I was a regular business, I wouldn't have any profit there. Something's wrong. So maybe I've misinterpreted what should be a contribution and what shouldn't. So a lot of people don't realize how that goes together. And then, of course, indirect. And these were some that came. So I'm just going to, where are my reports? Memorize reports. Okay.
Sarah, I can't believe it.
Demo fail.
QuickBooks, I swear. Anyway, I set up. I set up a. I wanted to show you my customer list. Which one was it in? QB. So I didn't make the appropriate sacrifices to the demo dots.
Exactly. I feel your pain.
Oh man. Yes, we know. All right, so let's look at just a couple of lists and then we're really done. Okay, so we looked at the chart. Where is it? My account. Okay, and the chart is pretty normal, other than the 10,000 revenue streams that nonprofits have. Contributed support, earned revenue, special events. Some of this is a little complex. Grants. Then we get into the expenses, and this usually starts with personnel. That's pretty normal. This looks like it's grouped a lot for the 990. Non-personnel, occupancy. Okay, but pretty normal stuff. You don't want it too long. Then on our customer list, okay, I can have regular donors here. Best practice, last name first, people. I did a 1 for unrestricted. You start learning little tricks. Like if something both has an R on it, you know, I'm all about the speed of getting information, and if I'm not importing it. So 2 is grants, the HHS grant, and I may say this research this year, next year. I'll actually say HHS grant ending August 31st, 2018, and I have a new code every year for every single grant. I track them completely separate because a lot of these donations will cross over fiscal years. So I did a Bayshore furniture grant. So what I did was I pretended that this city promises $50,000 and I put it into accounts receivable to grants receivable. You can customize the different, that's another thing I love so much about this program. Well, they didn't make theirs very pretty, but you can you can customize different sales receipts and invoices depending on what you do. If it's a donation, if you're selling advertising, you just pick a different template. And anyway, so we did a grant award for $50,000. And then, now you can't see expenses on here that are coded to Bayshore City. That has always annoyed me no end. Of course, I can do a quick report, but let's see, let's go to memorize reports. So I did a report that was, I went reports, custom, and did a transaction report. And I said, all dates, all transactions for this customer job name. And I grabbed the memo. And so I can see that we have a $50,000 restricted donation. And now when I bought a desk, it went to my normal expense account. I spent $485 for the desk. I'm gonna reduce my restricted donation, and it is a program cost because it's part of the educational program. Okay. So I will use these reports, like say it's at the end of the year, my equity section should have 49,515. Let's see how they do. Let's see how their bank accounts look. Reports, customer, balance sheet. Let's see here. This fiscal year. Wah, wah, wah.
You're breaking the QuickBooks.
I'm breaking the QuickBooks. Anyway, I use those reports to track what's left in, the unrelieved donor restricted funds. So, all right. So we have a chart of accounts. We have classes for the functions. We have customer and jobs to track those funding sources. We can do memos. Memos are a little tricky, but you can sort transactions and look for transactions using the memo field. You just have to be very specific on how you type. Customer and vendor types is another great way to chop up data and be able to, get grant reports versus, say, I've got parking. People pay for parking at one of my museums, and I need to report. If I say, show me all my customers, I think that puppy's going to go 20 miles to the right. But I could say, just show me my parkers. Okay. The item list is another. We typically use the item list to record revenue, but you can always use your item list to do both. Money coming in and out, and you can set them up to say, if the money comes in, go to this section, this account, and if it goes out, go to this. And then you can do reports on those item codes. So if a grant says, all right, I need this and this and this and this type expenses, and your budget is $1,000, I'm going to want to group those and how the grant grouped it, make an item code. And so all that's happening in the background is not going to affect my financial statements, and not going to affect the audit, but I can produce, subsidiary reports. So anyway, so that's a taste. Taste of how
Can I ask a question?
Papers. Absolutely.
So if you are tracking your grants or projects, then which would be restricted because let's say you're raising money for a water well in Africa. So you're going to set up a customer for a water well in Africa.
Right.
But now what happens when you have donor who's also a customer? How are you tracking that donor wants to give to water well in Africa?
Right. And that's where I said, if you have a campaign or a fund that many contributors are putting money into a restricted purpose,
yes,
you have to make a choice.
Okay.
Then what is the most important thing, and how can we, usually when that comes into play, we have donor software or other software to track the details of who gave us the money. So if you're going to track it by purpose, now you can also put their name in the comment and in the memo field. And sometimes I did have one like that. And for the audit, they want to know who gave over $10,000 or whatever.
Right.
So I had to take that campaign, sort it by memo. But see, I knew that this was coming up, so I made sure my memos were last name, And then with Excel, you can figure it out. It's a pain, but it was more important to track the purpose than it was to track the individual donor. But I couldn't use the software to print a sales receipt for a tax receipt. They had to do the tax receipts another way.
Right, because even if those donors are giving all year long and giving to various things, at the end of the year, you want to give them a receipt.
Right.
So I'm actually doing that through QuickBooks right now, but I'm not, for one of mine is a church, so I'm not tracking
Yeah,
the
church
functional
accounting gets crazy because they're doing fund accounting.
Mm-hmm.
And so you're tracking by purpose
Mm-hmm.
versus donor.
Mm-hmm. But I have to keep the donor too. So I'm doing it through sales receipts. It's working fine.
Yeah. So you're doing which field are you using for purpose and which field are you using for the donor?
So we just have different income accounts set up. So if they're just doing it like a general fund, we just have general income.
That is an idea.
Building fund, we put it to the building fund income.
And so you can get reports just on that purpose. Yeah. So if it's something major, like I have a building campaign going on with one client, yes, it's all contributions, but I'll start doing things for management purpose or for my own purposes, like campaign pledges versus campaign. There's a difference between a pledge that went to AR and straight out contributions.
Right.
So you have to see, I'll have some, they just always post it to pledge payments. And then I come in and I have to adjust AR.
Right.
You know, because they don't know, it depends on who's in the books, but they don't know necessarily to do a AR payment. And here's the other thing that QuickBooks doesn't do well is your tax receipt is based on the payment, not on the promise. So somebody pledges $10,000, they're in AR, you get the money, and I post an AR payment. There's no way to get a tax receipt.
Right.
Only way to get a tax receipt is to do a sales receipt. I've actually had clients that post twice with clearing accounts. Craziness, because they post the clearing account so they can print the tax receipt, but they also have to post an AR payment. So yeah, it's workarounds, but you know, overall, I mean, every nonprofit is so unique. I have some that are poverty oriented. I have some that are with the arts, you know, the events, and you know, so all different kinds. Some have federal grants, some don't. Some don't have any grants at all. Some are private foundations. So, you know, when somebody says I do nonprofit accounting, it's like, you need to be a generalist. You need to be able to know the differences, you know.
And a private investigator.
Yeah, that too. Well, you know, the thing is, if you want to be really good, I mean, we're the middleman between the client and the tax accountant. We need to be able to speak both languages. It gets a little more complex with a nonprofit because we have an auditor and a tax accountant and a board that doesn't know anything about accrual, you know. So it's a delicate little dance, but it's just puzzles, and that's why I love accounting. It's just, you know, putting these puzzles together and and you're constantly learning because it's changing. You know, I mean, for years and years on the 990, you had to break out postage and printing. I had to make sure all my charter accounts, postage and printing, were different accounts. They changed that in like 2008. You know, I don't have to have a separate account. You know, just stupid things. But
Well, thank you, Sarah. Does anyone else have any
other
questions?
questions? Other than you don't ever want to touch nonprofit accounting?
Yeah, we can all unmute and ask Sarah questions.
Hey, Megan.
Yeah, my husband taking the dog out. You guys hear that?
So hold on a minute. This is
Might want to unshare her screen.
yeah. I'm looking for the thing. Stop. Share. Okay, there you go. So I know Megan has gotten into QBO. So that's an area that I know very little about, is how to take all my knowledge with desktop and now apply it to QBO. So
I'm trying to show you, I think, you know, when I get a chance, right? Because some of those, but it's a different, you know, you've got some additional benefits. We've got some additional fields. We've got some new things we can do, but it does require like rethinking some of our old processes and going back and saying, okay, what was I actually trying to achieve with that process? And how do I achieve that result with this new tool rather than going, oh, this is different, or this, because you have to like, it was really frustrating at first. I'm finding it sort of exhilarating because you step back and you go, okay, you go back to the why. So now, with what I have available to me now, how do I achieve that?
Right. And that's what I'm excited to learn about, because I know I've always wanted more fields.
And we've got different fields, right? I mean, I'm super, Lisa was at the presentation. I am really excited about location. I'm really excited about the project center. Sarah, when you were complaining about you go to the customer center and you can only see the income. Project center, you can get a P&L right there.
Right there. Yeah. See? That's just common sense.
There's some great stuff.
Yeah.
I've thought for a while you should be able to use projects for nonprofit.
For funding sources, so you'd use projects for funding sources. You'd use location for location before.
Yeah, I'm using projects for grants, for restricted grants, and locations for with and without donor restriction.
So right there, I don't have to worry like Lisa's problem with the tracking the project. Or the
it's tricky
versus who gave it to you.
It's not true actually, because the way projects are set up in QBO, they are associated with a customer.
Oh,
so
are they jobs?
Essentially, they're jobs, but with this whole little center. So it's essentially a sub customer, but you get it all batched up in one little area.
Yeah.
Honestly, if you're trying to, then if you're building a well, the question becomes. It sounds like well building is a project or a program of your organization. So maybe
which list do you use to code that if the donor is in your customer list?
Yeah.
What list do you use to say I'm collecting money from my well?
I would say the well would be a program. And so I would use a class for it. I'd make a sub of my program class.
Yeah, sometimes you can do that. Yeah.
I
have done that with my campaign because of the way I wanted to do my reports. I just added we need the class names for function, and those are related to expenses, but we could also use them for revenue.
Well, and I think about any class is going to have income and expense, right? Any class is going to be, when they talk about what are your program achievements on your 990, that's going to be a class.
Right.
Like anything that you would describe, I would have as a class on there.
And that's when I mentioned like a project of a program. Like if your program is whatever, education, but you may have a project of, the well's not a good example, but that could be a sub of that main program.
Right.
I believe you can even do a sub-customer, and then actually have the project that is of the sub-customer.
Oh, interesting.
Which would give you 3 tiers deep.
Wow.
That's cool.
And then keep in mind with classes, you can do as many trees as, class trees as you want. We use classes as not for nonprofit, but for just normal books. We mimic our chart of accounts, so we can do advanced reporting. And then we also do another chop of for students or this or that. So you can create as many trees as you want, and then you also have location or division or business, as you would call it. So,
well, and the trick is to be creative. If you, one of the things, I don't know where I skipped over it, but it isn't. You have to learn the software, and then think out of the box.
Right.
Because it's less about that's where it is. It's less about the software and more about communication and understanding. So, like I had one client for 1,000,000 years, they budgeted by committee. Okay. This little committee gets 1,000. This little committee gets 5,000. Okay. That was what was important to them. So now I'm like, oh, my 990, I got my audit. How do I make them happy without coming in and going, their new account went, you can't do it that way. And I'm like, well, okay.
Let me think about it.
I wish I'd gotten hold of this QuickBooks before I started, but the chart of accounts was by committee in the expense section.
Now, one of the interesting things.
Let me just finish my thought. So then I took the customer list, and I made a customer called 990, and I did my little chart of accounts, printing, office supplies, meeting costs like that. And I actually coded it with the general ledger numbers that the auditor needed. And so they would go, the chart of accounts was the committee and what they spent. And then they would actually split it by the different customer names, which was really the real chart of accounts was on the customer list. Everybody was happy because I could print a trial balance at the end of the year. And when I got to the expenses, I went, hold on, let's stop at the equity. Then I print a report by class. Oh, no, by job. And I just cut and pasted it, and it was. So I have to do it once a year. So, you just have to, I like playing around to see what you can do. And what's nice about QuickBooks is you can try it. That doesn't work, you delete it. Take a sample and play, So
Linda, go ahead.
Yeah, one of the things I did is I worked for was a Christian school, and they also it was a nonprofit, and they would have fundraisers.
They have to have funds, yeah.
So, and a lot of the parents that sent kids to the schools paid tuition and everything, but go to fundraisers and they would donate money to the nonprofit beyond value. So I had 2 names. For every, it was the only way to keep them straight because they were paying money. So if it was a student, I think what we did was we put an underline before all the parents that were students. So all the students went with an underline in alphabetical in order. And then if they were giving money separate, not tuition or school related, it was their name in alphabetical order without. And I did have underneath each customer for the school, I had each of the students as jobs underneath it.
As job. Yeah, especially I've seen that at some of the churches I've consulted at, the church schools. They'll have, Mr. and Mrs. Smith, and then all the kids, that belong to Mr. and Mrs. Smith. But I wish I had done that. I have a nonprofit that they have 2 divisions, and one's a school and one's the regular therapy. And they run 2 completely separate ARs because the school is very restricted and very, for reporting purposes. So I have 2 ARs, and then somebody will come in and they try to get the parents to pay separately. And they'll come in, they'll go, here's $100. So yeah, so sometimes it crashes, but anyway.
Alrighty, well, we just went over a little bit.
Have you guys been looking into
an hour
yet?
You what?
Awesome.
What'd you say, Matthew?
Have you guys looked into Give the app for nonprofits?
Oh, no. What's the back end? I always want to know what the back end is.
I'm really excited about Give.
Really?
Yeah, I had a great, I don't know, I think, so Annie Terry introduced me to the founder at QB Connect, and then we had a call for about an hour and a half. I don't know, yesterday, Wednesday, the whole week is a blur, but it's this app that sits on top of QBO, and it allows small businesses using QBO to donate a portion of their receipts. They decide what percentage. They're shooting for 1%. That's why their name is spelled G1VE.
So this is a regular company makes a decision. I'm going to give a percentage of my receipts to a nonprofit?
They can give it to one nonprofit. They can give it to a variety of nonprofits.
It's like a donor directed fund.
Well, they're giving directly to the nonprofit, right?
Oh, okay.
It's just the middleman managing it for them.
Mm-hmm.
But the other thing that Give is doing is, like tooting their horn on their behalf. Like, look at this amazing organization, and these are the groups that they support.
Mm-hmm.
And they ran the numbers, right, Matthew, and they said, I'm trying to remember this number, but even if half the small businesses using QBO were to use it and give 1%, it would put like billions of dollars.
Wow, that doesn't surprise me.
Sector.
Alrighty, well, we're going to end the recording for today. Thank you, Sarah. Wonderful. Thank you so much. And we will see everyone same time, same place next week.
Great.
Bye.